Boom. We're alive, ladies and gentlemen. Thank you for joining us today. This is Tio in the Arcane Bear. We've jumped back above $42,000 for Bitcoin, and I think a lot of people are starting to recognize that we were in fact correct, although we do not have confirmation of that yet, so I'll hold my lack of humble nature. Let's dive in and take a look at the charts here. Okay, looking at Bitcoin on the 6 hour, we've got a nice ascending triangle. Now, I don't really like these smaller patterns. I'm a much bigger fan of this larger trading range that we've been following. I've been pretty consistent in assuming that this is a much larger reaccumulation pattern. We've gone over this in many of our other videos. Today, I just want to do a little bit of a take and look. Well, first off, just as a side note, Luna is up at new all-time highs. This is also another great sentiment indicator. When we see assets within our same niche going to new all-time highs, it does give more confidence into the idea that this bull market is not over. So taking a closer look at Bitcoin, we did drop some Fibonacci sequences here on the side. As again, I pointed out that we could see a quick dip down to $28,000. This is becoming less and less likely. And the reason we look at a downside is more to be cautious about understanding what's possible. Too many people start to feel scared when things change. So I stand by this kind of consistent idea that your mantra should be heads I win, tails I only lose a little. And the more you repeat this idea, the easier it is to come to a really nice investment thesis, because you can keep repeating what it is what it is that you've done that's been successful, which is not risking too much at any one given moment, and also increasing the time necessary for the conviction that's involved with making a good investment. So as we go back down to the 6 hour here, this current ascending triangle is, again, I don't like these smaller types of market patterns. I think they're pretty much useless. Most people who use them are probably pretty bad at technical analysis, in my opinion. They can be, and not that that makes you bad at it, but I just think that they're so unreliable. A lot of these patterns are very, very unreliable. One of the key important factors, though, for me, was this moment when we first crossed up above this descending trend line back here around February 3rd. We were actually quite bullish from this moment onwards. Now, there are a lot of things going on in the macroeconomic headwinds, which actually brings me over to nickel. So this is the nickel chart. Here, only going back to June, sadly. Oh no, there we go. All the way back to 2017, just so you can see some of the data for nickel between 2015 and today, so you can kind of tell how outrageous this is. Now, understand that nickel is used predominantly in batteries and electronics. So to see price surges like this is monstrous. Now, I know Joe Biden is trying to tell everyone that he's in charge, but it was actually Russia that decided to cut many of its exports to the U.S. So after the economic sanctions, Putin decided, hey, you know what? Well, guess what? You can't have any of our nickel or wheat. And look at the price of wheat. Now, wheat going back to 2015 is not as incredible as nickel, but I think that it's important to recognize that when you're dealing with massive economic headwinds, one of the reasons why Bitcoin is such a great investment is not as an inflation hedge, but against a hedge as governments start to do stupid shit. And the United States government has done a lot of stupid shit lately. Although I think that this is just in general the nature of governments. They are beholden only to momentary public opinion. Most of them say one thing today and do something tomorrow, and their confidence is basically gone. Now, if we actually go over to the US dollar and make a nice comparison here to the dollar, get a little bit of some of the insight that's going on, you can see that the US dollar has been in a trading range from around 2015 to 2021. Now, one of the interesting parts here for the dollar is going to be whether the dollar finds continued strength or whether it breaks down. Now, again, we could make some arguments that we are also in like this, what you call an asymmetric triangle as well. Again, I don't like to use patterns like this. I much prefer these horizontal trading ranges. They are very powerful. And although I think we could see a quick rip up to 102, it's very likely that this is actually a declination in the US dollar over the long term. One of the charts I wanted to share was actually from Pantera, and this is Bitcoin priced in Russian rubles. Now, again, this is a lack of faith and confidence in what your government is doing and your ability to bring your assets with you. Now, I think Russia currently declared that you can no longer trade the ruble for any other currency. This is probably not just for its citizens, but also for foreign currency exchanges, which is where a lot of the probably short selling has come from. But ultimately, I think that this is a good predictor for what the future will look like in Bitcoin's price regardless. Although I don't think we're going to see an exact straight up move, the likelihood of the continuation of this much larger accumulation pattern is gaining a lot of strength in my opinion. Now, I disagree with a lot of people that think that this is a bear market. This, in my mind, and I've said this for a few months now, is a reaccumulation market. The fact that we came down really hard here is a nice test. It wasn't a huge supply test yet either, but we did get this on the initials ST of phase A. So I'm quite stoked about that. It would be nice to see that happen one more time as a spring somewhere within the market cycle. When we've compared this to the S&P 500, we do see the large springs come out, and we haven't seen that massive amount of supply. But when we go to look at the balance of percent on exchanges for Bitcoin, we also don't see that supply coming in, which is ultimately bullish. So even if we do not see that supply test, we've seen a consistent downtrend in the Bitcoin that is available on open exchanges. So here we can see that just over the last 24 hours, we've seen a nice chunk of supply taken up on the open markets, and we keep kind of hitting this bottom area around 13.4% since around October. Now, what's interesting again is we had a massive price jump up to $60,000 and back down to $30,000, yet the supply in the market has stayed relatively stagnant. Again, this is the reason we are leaning so heavily into the potential of an accumulation market. And if you go over to our private bear den here, which is where we manage a lot of our stuff, we'll go back to the trade setups. I want to take a look at two charts here. Actually, let's go and just do it live. On our favorites, this is the R HODL ratio. We're going to have to switch this to a line chart, and let's get a little bit more data in here in general. Which was where were we trying to look at? Realized cap HODL waves. Which one was this? Oh, there it is. Supply last active over the years. So this is one of the charts that we shared most recently in the private den. I think that this is a really bullish indicator. We're going to switch to bar so it seems more apparent here as well. And actually probably want to get my face out of the way so you can see some of the data as well. So actually I'm going to have to go back over here and slide my face down at the bottom, and there we go. Thanks for bearing with me. Okay, so this beautiful orange chart here, Glassnode's data. On the left hand side, we've got from 2013 to 2014, and as you can see, as the price starts to move up, the amount of last active Bitcoin over the current year drops dramatically. And as we go into an accumulation market, this starts to increase dramatically. And as we run up into bull markets, it decreases. So every time we saw an increase in the supply, the price came down, and the supply that's been held for over a year also decreased. So if we zoom in closer to the last month, or 2 months of this accumulation, what I believe is an accumulation market, here you can see a massive amount of the supply that had been held for 1 year started to decrease, and since the $30,000 mark has massively increased. And every time this happened in the past, it was a leading indicator to the bull market continuing, right? So back in 2019, when Bitcoin went from 13,000 down to 3,000, even though that $3,000 had a big dip, it was actually decreased here for a moment, but again, this was during the height of the pandemic too. So the fact that it actually didn't drop significantly more than that is a beautiful experience, but also I think leads into the idea of the power of a spring for those of you that are studying the Wyckoff moves. So here we see this nice big dip of the supply that had been held for a year, and then that has gradually been increasing pretty much day over day since that $30,000 mark. So I believe we are very bullish. Anyone who thinks that otherwise, that's their own opinion. This is clearly my opinion, but as we've compared the Bitcoin on open exchanges, and we'll go back to the line chart to show this, because it's been decreasing quite consistently, there's no reason to believe that this bull market is over. And in fact, an accumulation cycle, even if you want to call the last few months a bear market, you should always look at market down as an accumulation mode. I think far too many people get this wrong. They're like, oh, we're in a bear market, boring. No, that should actually be one of the most exciting parts, because it means for you, you have the opportunity to continue to accumulate the assets that you are interested at a decreased price point. And this is fundamentally the point of investing to begin with, is to get as best a price as you can. And this is again done best through time, over and over and over again, so that you get the most valid entry point over, let's say, a 2 to 5 year span. Now, if we go back to the Bitcoin chart, what's unique here is that from our initial PS phase, we're 440 days into this. We have seen other previous accumulation cycles take around 300 to 700 days. So there's no reason to believe that maybe even by the end of 2022, we're back at $60,000 and on our way in 2023 outwards of $100,000. Now, again, I like that Pantera chart that we had shared in our private group here. We'll go back to the live trading. There it was. This is fun for me. I think, again, this is kind of the future foretelling of what's going to happen. Right now, the economic crisis that is taking place, a lot of people don't recognize or maybe even know this, but Russia provides the world a shit ton of commodities. Wheat, corn, nickel, oil, and you can see that all the way through the markets right now. Now, I don't know what the devastating effect of this is going to be, because I'm not that well educated about commodities at large, but we had, I think, nickel, even though it was on a wick, was up somewhere like $100,000. That's just insanity, right? So this means the cost of batteries for electric cars is going to dramatically increase. You could be talking about the price of an electric car increasing by 279%, or at least the batteries and many of the components in it. And then if we look at wheat, this is where I start to get a bit more worried in general. We have to remember that 90-something% of the world's population lives on less than $30 a day. And if we start to increase the cost of everyday living, the lower 90% of the population gets upset. You could see food riots. Now, I don't think we're there yet. We're probably many months or maybe even years away from seeing something like that. But these are the initial blips in the system that are quite worrying. Now, just for fun, we'll go through a bunch of the other commodities. Here is the energy on currency.com. I've seen a massive spike in the last 24 hours on currency. We're taking a look at the energy index, also the same thing, a massive spike. Here again, grains since January has increased, we'll go from the bottom of the range here, 50%. And these are the things that start to be more concerning for me. This is corn or the index, index for agriculture. Down below we have corn. I thought I had corn saved here. Okay, I apparently don't have the corn. I don't have corn on here anymore. I must have accidentally deleted it last night. Nonetheless, when we see things like grains and agriculture increase dramatically, this is very worrying. Not for people like myself, or I'm sure most of you, but the bottom majority of the world's planet lives on less than $30 a day. And if we increase food prices for them and they become unhappy, this is usually how revolutions start. So I would not be too quick to dismiss the changing prices in these assets. It is probably a pretty bad sign. Aside from that, aside from the horrible indicator there, we actually see a quick rebound. I shared this the other day too. I thought it was quite interesting. This is just more evidence of buy the fear and sell the greed. So ultimately here, this big dip was when the pandemic started, the day it was declared, and here's when it was over. Now, a lot of people are like, oh, well, what about the war in Russia? It's like, well, that started here, and that's really had nothing to do with the rest of the prices. And one of the things I think that's important to understand is that economic indicators and war are actually usually very closely linked. You can look up Martin Armstrong. He's got a really unique thesis and a computer program called Socrates that likes to look at these types of cycles. And ultimately, they do seem very cyclical, which again bodes to the idea that human nature is not just a facet of ourselves, but maybe a much larger version of things that are going on within society. So this is important to keep in mind, is that when people are super scared shitless running around buying toilet paper, this is a great place to be buying. And when the pandemic ends, the restrictions start to get eased, this is a great time to look at taking some of those profits. Now, I'm not much of a profit taker. We focus on venture capital. Our main goal is to just be able to withstand the storms throughout a multi-year period and acquire assets at a depressed price or an increased price. It seems to not matter almost. I remember buying Bitcoin at $1,000 when it was at the all-time high at that moment, watching it come down to 200 and thinking, oh no, I made a mistake. I then quickly learned to just keep buying around the beginning of 2016, 2017, when Bitcoin was around $400 to $600 again, shortly after I started this YouTube channel. So ultimately, the reason why I do this and I keep showing up for you guys is because I made so many mistakes in the process to get here. I know that so many people are new to investing, and in an economic crisis with so many macro headwinds coming in, making good investments, even if they are small, can be a life-saving potential. So I always have cash, gold and silver. I actually bought some silver rings the other day. Not that those are really economic value for me. It was just for fun because we're in Mexico. But I have had gold and silver since around 2011. I bought them around the same time I started buying Bitcoin, quite interestingly enough. I was interested in assets that were not correlated to the traditional fiat ecosystem. And I've used that kind of as a guiding light for a lot of my sentiments and indicators to begin with, which is one of the reasons why something, again, like Luna or Avalanche or Solana is so interesting to me, is because these are also assets that you can walk across borders with and hold them in your brain. That is a very unique function of digital assets. Although they may not be as useful in the moment of crisis, people are probably looking more for cash, gold, and silver. If you need to get on a bus, maybe can't use your Bitcoin. So it really depends on where you are in the world. I try to front run and get away from failing economies long before they get there. I left Canada back in 2006 because I could tell that we were headed into tumultuous times. I bought a farm with running water that has 180 fruit trees. For a reason. It was because I feel that there is largely a collapse and failure in the financial and government systems coming along the way. And the best way to plan for the future is to create your own. So we're going to dive in. We're going to take a look at a few of the thoughts and questions. Just a quick little update today. I'm still ultimately bullish. All the indicators lead us in that direction. We've got a few from our private community here. We'll start with... It says, usually answer my questions, but I was still waiting to find a good Kiva loan to do someone who could use it, maybe someone who is dealing with war. I'm not much of a virtue signaler. I do love Kiva, which is one of the reasons why we use it. Not because of virtue signaling, like you'll never find a flag on my posts or anything like this. I think most of what the mainstream media tries to sell us is generally garbage. So I try to stay away from their narratives almost implicitly. Almost every time they've told me something, if you invest on the opposite side of that, you generally do really well. But we will make a Kiva loan. So for those of you that do not know, Kiva is a 501(c)(3) nonprofit that hounds out loans to underbanked entrepreneurs around the world. So we actually have a team as well. If you go down to our description below, you can take a look at the Arcane Bear team. As you can see, we've lent out $5,200 so far in the course of starting our campaign here. It's really easy to sign up for, arcanebear.com/Kiva, and you can join the Arcane Bear team. Oh, that's not what I wanted to click on. Let's go Impact. As a group, as the Arcane Bear family, I wanted to share this with you guys as well. I think we've contributed over $23,000 in loans together. Yeah, there it is. We have 71 team members on the Arcane Bear team family, so that's super exciting. We're going to make a loan today. We'll do that at the end of the episode, but if you haven't yet signed up for Kiva, go ahead and do that. Okay, let's take a look at a few more of your guys' thoughts and questions here as well. Okay, sorry, I just got to jump around back to the... okay, here we go. It says questions. Avalanche and Sol are winning the race against Cardano, which is doing poorly against BTC, or do you see other reasons? Avalanche is great technology. Solana is also, I consider, great technology. I also want to give a shout out to Zubin, one of our internal Bear Den researchers. He brought Luna on the table and wrote some great articles and write-ups there in the private den. Luna's been doing really well. Again, we're really early on in this ecosystem. So Luna, Avalanche, and Solana all fall under our venture capital thesis, which means they're high risk, high reward potentials, and we've seen that from them. I think when Zubin first dropped the PDF on Luna, we were back down like, what was this? I think we were around $7 or something. So congrats to Zubin for calling that one. That was an absolutely amazing play, up 1,300% since he dropped that newsletter. I'll show you guys here. Thank you for that, Zubin. I really appreciate your help and input at the Bear family. Actually, to all of our Bear Den staff members, thank you guys. Without you, I wouldn't be able to do this because there's a lot to do. So that's important. So what's happening? You're finding a buying and selling. You're also looking at the distribution cycles of early investors potentially here too. So it's not an easy answer. Really, prices move based off sentiment more than anything else. I think a lot of people are starting to understand that Luna has a lot of potential. So let's take a look at this. It says Luna's been growing over almost $1 billion a week in total locked value. So much curve balance. There's something else really cool. Actually, while we're on that, just to give another shout out to Zubin, he shared something with us today that I really liked as well, called the Mars Protocol. So check that out. It's a new version of Aave, has a few more functions in it too, aimed to build on the Terra blockchain. If you want to stay up to date with a lot of this stuff, guys, too, you can follow us on Twitter. It's where we share a lot of our news and updates. For instance, Avaric Saga, which is one of the play to earn games we've invested in, is dropping some cool stuff. So is Solus and Well. If you haven't yet, follow us on Twitter. Make sure you like and subscribe to the Arcane Bear YouTube channel. Oh, there it is. There's the Kiva loan impact. So look at this, guys. Through Kiva, which we've lent out $23,000 as a community together. I'm really excited about that. That's so great. 25 loans to artists, to services, clothing, loans, retail, food, and agriculture. Our biggest loan for entrepreneurs, and these entrepreneurs pay us back. So when you make the loan, over the next few months, the person who you're lending to pays you back. It's a pretty incredible platform. I look forward to seeing more like this. And there have been a few projects that have launched recently that I like here, but Kiva is amazing. If you haven't checked them out, make sure you do that. Go through a few more of your guys' thoughts and questions today. It says, let's go actually live stream here for a minute. Okay. Good night from Bali. Awesome. A dead cat bounce. I don't think it's not enough homework there, Mr. Moonboy. A little bit deeper of an insight there. It's not a dead cat bounce. I remember that when people were saying it was a dead cat bounce, we bounced all the way to $60,000 from 30,000. Like, no. This is a new trading range being formed. I'm very confident about that. And every day we go forward, I become more and more confident about that assessment. Let's see. Good morning from California. We're only months away from food riots. Yes, that could be a big potential looming downside, and it's something we're keeping our eyes on. If you're in CDMX, I'll buy you a drink. Awesome. I appreciate that. Probably will have to be in Mexico near the middle of April, so I'll look forward to that as well. Are you engaged yet? That's a fun question. No, not yet. We would be a bit more patient here. Hazmat says, all I need now is a bit of land in Costa Rica and I'm an arcane puppy. That's funny. And is decimated a bust. You know, this is always one of the interesting things. You need to think long term whenever you're making investments. This is one of the reasons why it's so important to make consistent investments month over month. Say you're interested in something like decimated, right? Whether you got to participate in the IEO or not is really unimportant. What you want to do is, as time continues, you want to increase or decrease your conviction by the investments that you're making. You should almost look at investing as a bill, right? Like an internet bill. Like every month I need to invest $10,000. How would I like to spread that out? You know, I'm pretty confident that Bitcoin's going to be here. As you become less confident, the risk for each of these potentials increases. Something like decimated is a high risk potential, right? Which means it could go to zero. But we could turn around a year or two from now and it could be one of the most popular games in the blockchain sector. We don't know. This is why we make investments that stagger themselves through time. So we have the ability to make an investment, not just today, but on a month-over-month thesis, because we're not always going to get it right. And as time goes on, you might find there are more things that interest you, and you don't want to be too heavily invested on a single investment when just being patient, as you've seen, gives you the potential to get a much better price. Well, you're thinking, well, Tio, look, if you're looking at the Luna chart, like I should have just thrown everything into Luna June 5th, I'd be up extraordinary. And again, Zubin, hats off for this one. You did really good here. I liked your pick on Luna, by the way. We'll have to do more podcasts together. But understanding that making consistent investments over time averages out, so that even if your investment comes back down, it's going to give you the space necessary to really make sure you know what you're doing, so that you can store your assets safely. And this is one of the most important fundamentals of any good investment thesis. So we'll dive back in. We'll take a look at a few more of your guys' thoughts and questions before we jump out from here. Jake Sparks says, how will the NFT market fare if we remained entered a crypto bull market? I imagine less people will want JPEGs and want to be at a Bitcoin. What's your thoughts? The art market is always interesting. If you look at traditional art, it's separated from a lot of actually physical assets in general kind of do this because they're hard to sell. Take a house as an example, right? It's not easy to just sell a house tomorrow. So because your assets are physical, they become less liquid. And the less buyers there are, the less easy it is to sell. So you don't notice a lot of the price fluctuation in assets that are generally harder to sell because no one wants them as much as a functioning asset, right? Now, it's a hell of a lot easier to sell Bitcoin in the tens or hundreds of millions of dollars than it is to sell JPEGs through NFTs. But the art collector market is usually through people who have enough capital to spend on that art that they're not really interested in selling it to begin with. One of the most expensive, if not the most expensive art piece in history was sold from an artist named Basquiat, who died in the late 90s or so, early 90s or something. His art sold for hundreds of millions of dollars, and the guy who bought it will probably never ever sell it, right? So what's the functioning of asset value when you don't have a lot of buying and selling? One of the reasons you see so much volatility on the price charts is because people have the ability to buy and sell in heightened moments of fear. You don't have that on these physical assets. They're just not as easy to liquidate, and therefore the market looks like it's calmer. Whether it's going to go up or not, I'm not really that interested in the NFT sector, aside from how it relates to games. Now, I've drastically changed my thesis away from layer ones. We were hugely interested in Solana, Avalanche, Luna in 2020, 2021, but now my pure conviction comes from the on-ramp of that next one to few billion people playing video games, using those video games as their proof of work and their proof of existence to earn digital assets as an on-ramp to financial services. So I am extraordinarily bullish on the play-to-earn sector because of this. Because there's the potential for an on-ramp for a billion people who do not currently have financial services. Anyways, I hope that makes sense. I think that the NFT sector in the video game world will boom forever. In the collector's art market, although it's big, it pales in comparison. The traditional art market, it pales in comparison to the video game sector. The video game sector's revenue is absolutely fucking monster, tower over the collector art market to begin with. So not only are you looking for market size, but you're looking at the rapidity, the repetitious nature and the growth of that market. And the video game sector year over year has been growing significantly. And now I play video games, so it's growing even more. I think the video game sector and the play to earn sector is still vastly underestimated. Actually, which reminds me, one more thing. I'm sure a few of you in the private den got into this as well, but one of the last guilds we will probably invest in is indie.gg. You can follow them on Twitter. They actually are just launching. Oh, boom, here we go. They're just launching on FTX I think they go live tomorrow. Yeah, the IEO was yesterday. Big fans of guilds because to me they represent kind of a storehouse as the on-ramp for financial services. So not just a place where people can go play video games, but again, an on-ramp for financial services. This is why I think the video game sector has not even begun to breach into its potential as well. So one or two last thoughts from the live chat here. So if you got them, drop it in. CRO. I have no real opinion on CRO. I know they have some functioning credit cards and you can stake that for better, I don't know, yield and using the credit card. CRO versus something like an Avalanche or Solana, the utility is very low. And again, I'm not looking at video games like, oh, this is just a video game. I'm looking at video games as a sector for an on-ramp to 1 billion people plus into financial services, which they could not normally access. And you're not going to get something like that through CRO. We always wondered where mass adoption would come from, and I think we've found it now. So I'm not going to change that thesis until we see something otherwise. So CRO to me is basically boring. Not that it might not do well. It's just I try to stay focused in my thesis because I'm only capable of doing so much. So we're going to end today's episode off by one of our private members there asking for a shot to take a look at... oh, God, look at all these horrible bots. And there's so many of them. Oh, my God, look at them destroy the chat. Okay, well, now that they're ruining the chat anyways, we're just going to jump in. We're going to do the Kiva loan. We'll go back to the Bitcoin share so that you're not bombarded by that annoying comment. Sorry about that, ladies and gentlemen. Apparently, YouTube is really bad at blocking some of these things. So we'll just go over here. Actually, give me a quick second. Let's see if I can actually resolve any of that. Wow, so many spammers, hey? That's incredible. I don't know how they're able to do that, but anyways, let's take a look. We'll do the Kiva thing here. Let's roll over to Kiva. Yes, okay. So again, if you haven't tried Kiva yet, I highly recommend it. It's a lot of fun. We're going to make a loan. We usually make loans. Let's lend. We usually go, let's see what's happening. Lend now. Okay. Kiva's going a little slow today, ladies and gentlemen. Okay, we usually look for agriculture. Let's see, she needs $100. Let's go for someone who needs a bit more. Xenia. Xenia needs $625. Let's check out Xenia. So this is really fun too. You can see Xenia's story. Hardworking mother has gained a lot of respect in her village because she supports her family. She lives in Makutano with her husband and children. In Kenya, agriculture is one of the most competitive industries, especially due to the high cost of operations. Xenia's requested a loan to buy food for farms such as certified seeds, high quality fertilizers. So she needs $625. So let's just go out and we'll give her $500 today. So over the course of this, she'll be able to pay us back probably over the next 24 months. So we'll check it out. And again, if you haven't tried Kiva, it's super fun. Also make a donation to Kiva today. I'm going to give you less than that. Let's give you $25 Kiva to help manage all the work that you do. And boom, just like that, we've now made a loan to Xenia in Kenya. Well, thank you for that, Bear family. Really appreciate all your guys' support. We're going to log off because the streamer I'm going to have to ban this entire sentence here so that you can't do that in the future.